Hey everyone, this is Jason Hilliard with Forecast Capital Management. Today I wanted to go through a few things that I thought stood out to me, mostly data related ideas. So the NAHB builder confidence continues collapsing, as you can see from this slide. It's a negative 3-point month-over-month change. The Fed announcement is Wednesday, take note of that. But the September NAHB builder confidence fell by 3 points month over month to 46, as I mentioned. It's the lowest print since the depths of the pandemic in May of 2020. And to quote the NAHB economist, the housing recession shows no sign of abating as builders continue to face headwinds around elevated construction costs and tighter Fed policy. Now, we've written about this in the past, but breaking housing inflation is likely really a key unspoken goal of the Fed policy, as the shelter component of CPI had its fastest increase since 1991 in the last CPI report. And just to give you a sense of how big of a deal that is, at 33% of CPI, shelter is obviously a major contributor to the headline number. Also, as I mentioned, the Fed is going to meet on Wednesday. As such, let's go to this next slide. So the Fed meets on Wednesday with an interest rate announcement in the afternoon. A 1% hike from what we are looking at has about a 20% probability according to the Fed funds futures. And as you can see from this chart, there are currently 7.43 hikes priced in for the remainder of 2022, which is off the lows by quite a bit. So that is something to really keep an eye on Wednesday when the Fed comes out with their interest rate decision. Also, global freight indices are in absolute free fall on a year-over-year basis, which is, on one hand, it's deflationary, but also likely indicative of slower demand. The Shanghai Freight Index is what this is showing, and that's gone down 49% year to date. Also, the shipping rate to China, from China to the U.S. West Coast, is down 80% year to date. Shipping rate from China to the U.S. and East Coast is down 61%, and shipping rates from China to Europe are down 47%. All these are decelerations to the downside. So keep an eye on that. Shipping rates are obviously deflationary, but there's a lot of other things going on. And the last thing I want to bring to everyone's attention, we look at this every day. We want to see the CFTC non-commercial net long positioning. We want to know where the market is positioned. So on a day-to-day basis. So if you look at the S&P, what we're noticing is a pretty significant on a one-year Z-score. All the way on the right side, second column from last, we are noticing a negative 1.87 times net short position. So there's a lot of folks that are short right now. Typically, it's a number, if it's negative, that there's a lot of people that they're kind of offside. So what I mean by that is might be a good time to start taking the other side of that trade. So negative 1.87 is pretty high. So we would look to get out of, cover some shorts in the S&P, possibly go long in certain sectors. We also want to look at the two-year note Z-score is at 2.90, meaning a lot of people are long bonds and short the yield. That's pretty large, pretty significant. The other thing to look at is gold. I know a lot of people look at gold. We have a 1.91 times one-year Z-score. Historically, that's pretty large, so a lot of folks are short gold right now. So as I had mentioned before, that might be an opportunity to go long gold. I'm not saying you should, but that's the way we look at things, is just this is one factor of many that we look at every day. But certainly something to take note of every single day. See where those Z-scores are. See if they're negative or positive. A lot of times they change day to day. But anyway, that's what I wanted to show you guys today. I think it was important. All of these characteristics of the market. So look out for Wednesday, Fed funds rate day. Otherwise, have a great rest of the week. Hopefully we'll come out with more of these going forward. But Have a good one. See ya.